Our first guest is taking over a new crypto derivatives exchange that was incubated within a crypto custody tech firm. Joining us now to discuss is Ankex CEO and former CEO of Genesis Trading, Michael Moro. Welcome to the show, Michael.
Good morning. Thanks for having me.
Thanks for being here with us the morning after the 4th of July. Let's talk about Ankex. You started alpha testing last week and will begin with perpetual futures contracts in markets outside of the U.S. Tell us a little bit about this new venture of yours and maybe why you've decided to launch outside of the U.S.
Sure. I'm happy to do it. So I think, the events of sort of last year, I think kind of highlighted the importance of separating trading and custody. And Qredo was the company that decided to incubate this exchange, which became Ankex. Qredo, which operates in the crypto custody infrastructure space that allows users to self-custody their assets, chose to build an exchange, a derivatives exchange, that is entirely sort of non-custodial. So relying on kind of Qredo custody infrastructure and kind of highlighting the importance of separating out certain responsibilities. There's lots of other projects in the marketplace that are trying to do the same thing, kind of unbundling the traditional CeFi model. And what Ankex does is, in an entirely non-custodial way, create a brand new crypto derivatives exchange that will offer the perpetual futures that you mentioned. And we're excited to kind of get this product out to the marketplace and to get users to start trading on it.
So, how does that work in a perpetual futures exchange? Because, obviously there's a lot of leverage involved in perpetual futures. At least that's the way we know and love them. It's essentially almost as if it's spot trading, but such short term. They're futures, but such short term they're essentially spot. So, how does it work custodial wise? Who's taking custody and is it are they doing, in this case, I think you're only using USDC, correct? So,
correct.
What's changing hands, if at all?
So collateralized margin, as you mentioned, Lawrence, is USDC only to start with. We will certainly add other collateral assets as we get on in the product roadmap going into the future, except the coins is certainly starting with the Qredo wallets infrastructure, stay in the user's wallets at all times. So even after opening up a position or putting on an order on the Ankex exchange, the coins that are used as initial margin around kind of the perpetual future remain in the user's wallet. Now, that is locked, so it is unable to be withdrawn from their wallet, except that the assets never actually leave their wallet up until the time either there's debits and credits correlate to kind of the funding rate and how that operates, and or they decide to kind of close their position, or they're ultimately liquidated due to the position that they've taken and what happened kind of in the marketplace. So this entire aspect of this, the coins stay in the user's wallets up until the time when settlement ultimately kind of needs to happen. So the exchange does not hold custody at any time.
And that settlement is how many hours? It's 8 hours? How many hours?
Funding rate calculations are happening every eight hours, except the settlements are happening at alpha in every 10 minutes. So every 10 minutes, we'll see movement on chain of kind of the funding rates back and forth, depending upon which side of the trade you're ultimately on. And obviously, when you liquidate or kind of sell your position, that'll obviously happen instantaneously.
And what currencies are you using? Are you starting these contracts on? Is this Bitcoin or anything else?
So it's Bitcoin, Ethereum, and BNB are the first three assets that we're going to be trading during the alpha initial user testing phase. But we will be rolling out new contracts certainly over time and getting involved into the long tail assets. And we'll see lots of different contracts trading on Ankex certainly over the next few months.
BNB is a little bit brave right now, isn't it?
It is, and I think that kind of speaks a little bit to the offshore nature of what we're doing here. And we decided to kind of get registered in the BVI to start with as a VASP license with there, and then kind of moving on to getting other licenses around the world. We are looking at the UAE next as a potential regulator of Ankex and continue to upgrade licenses. The US is currently not really on our regulatory roadmap. It is probably 3+ years away. And I think kind of the reasons for it, I think, have been well covered on the show, but kind of the appetite for crypto, certainly in the U.S., and I think kind of the regulatory stance needs to change markedly before Ankex can be there.
And Binance didn't have a hand in having you pick BNB?
No, they did not. That was just one of the three most heavily traded assets in crypto at the time.
How many users are taking part in the alpha?
So we're going to start relatively small. So we're in kind of the friends and family and early investors part of kind of the alpha testing. We'll certainly kind of get a lot more excited because we do have about 17,000 waiting users on the waiting list that are wanting to get in and involved in using Ankex. And so about a month into the alpha, we will start letting people off that waiting list, call it 100 to 200 a week. And then by the conclusion of alpha, the goal is to kind of get to about 3,000 registered users on the platform, and we expect the end of alpha to kind of come around September timeframe. We will then be more free to kind of open it up into more of a formal beta launch in the fall.
What do your users look like? What is the demographic of them?
So naturally, because Ankex was incubated through Qredo, we are cross-selling Ankex to Qredo users first and foremost. So the Qredo user base is about 87,000 wallet holders existing on the Qredo platform, and about 400 of those are corporates and institutional accounts. And so from a dollars perspective, we certainly do expect kind of the corporates to be there, but from an account holder's perspective, we will certainly lean a bit more retail at the start as we kind of ramp up our products and contracts that we're offering on the exchange.
So just to sort of ask a bigger question here, right now, market, I mean, it depends on who you ask, but there's been some negative headwinds both in the market and regulatory headwinds, and so some would say this is sort of an interesting time to be launching something like this, right? I mean, I guess my question is, what gives you the confidence to launch right now? What are you seeing that makes you think that launching something this big at this moment of time will be successful?
Ultimately, and I've been in crypto now for over 10 years, and I know how difficult it is to sort of get started and ramp up and scale when the bull market is already here. So I do think it's important that we build and test in a market like this so that we are ready for the next bull market. Then I personally feel that next year will be a massive kind of crypto bull market. And our job here at Ankex is to obviously build an exchange that can scale and deal with the load that'll certainly kind of come in a bull market scenario, and to battle test the exchange and the tech to be ready for that market. We cannot possibly launch in a bull market and expect to do well. So we need to kind of make sure that we're ready for it, and no better time to kind of get tested certainly than this year.
But what is the evidence that you're looking at that suggests that next year will be a bull market? That's sort of what I mean. Like, what are the factors that you're seeing or the elements that are seeing that gives you confidence that that bull market is going to come? Because that's definitely not the consensus opinion. I mean, some people think that, but some people are like, oh, crypto's over. I'm going to go, just do AI now. So, what gives you sort of that? What is giving you that kind of confidence in next year's bull market?
I think certainly experience in the industry and having done this for as long, kind of knowing kind of the waves of market sentiment that come around, I think is certainly one. I think the macro picture, I think, is certainly another. We talked about a lot of traditional institutional investors certainly getting involved, but I've been in this space for too long to not know that like the Bitcoin halving is still certainly a market catalyst, certainly in my brain, as to what brings kind of investors' interest back into the table. And so I certainly expect that to be a catalyst for the leading up into the event and kind of certainly after.
You said that the U.S. is not on your regulatory roadmap for at least 3 years. We've seen the SEC go after companies that are registered and licensed in different jurisdictions because U.S. Customers are on their platform. How are you thinking about restricting U.S. users or preventing that from happening with this new venture?
So ultimately, it comes down to, we'll do the obvious kind of IP geofencing type stuff to kind of prevent users that should not be accessing the exchange. But ultimately, on the AML KYC onboarding side of the house, is obviously look through to the ultimate beneficial owners of the company. So, there's lots of companies here in the U.S. that obviously have managers and people in the U.S. but have offshore entities in the BVI or the Caymans or whatnot to kind of run their hedge fund through. We will be certainly looking into who the ultimate owners are and trying to obviously establish whether or not those are legitimate companies that are located offshore or are just kind of setting up legal entities offshore to be able to trade on some of those venues. And we'll have to be tight as we possibly can here to eliminate customers out on the platform that should not be trading on it legally.
Now, we want to get your opinion on this tweet here, as you were previously the CEO of Genesis. And I need to caveat this. You were the CEO of Genesis before the company filed for bankruptcy. Gemini co-founder Cameron Winklevoss tweeted what he described as a final offer in the debt restructuring talks over at the bankrupt digital asset firm, bringing months of negotiations and mediation to a head with a plan for $1.5 billion in forbearance payments and fresh loans. I need to caveat here, both Genesis and CoinDesk are owned by DCG. What's your reaction when you see this tweet?
So it has been, almost a year next month, certainly since I left Genesis, and I really have not been in touch with the folks at DCG and Genesis kind of this entire time. I think I've moved on, they moved on, so it's very difficult to know, except for the fact that I will say that we're hoping for a resolution here. I'm certainly friendly with a lot of the people that are still remaining, and certainly just kind of hoping for the best outcome, certainly for DCG, Genesis, and for Gemini, frankly, so that the industry can ultimately kind of move on. But other than that, I don't have any particular insight into that particular tweet or kind of what's happening recently.
Yeah, and just one more on Genesis here. You were there for Luna's implosion, Celsius's 3AC, not FTX. What have you personally learned about risk through that experience, and how might you be applying that to this new venture?
For sure. When I left Genesis, and as I thought about what I wanted to do next, I certainly wanted the next thing I did to be about kind of crypto industry lessons learned. Where did we go wrong in previous years, and what can we learn from that ultimately as the industry looks to move forward and regain trust from existing and potentially new investors? And certainly separation of custody and trading is certainly one aspect of how to bring trust and transparency more back into the system. And so certainly doing things more on-chain, more transparently. And if the exchange is responsible for doing fewer things like Ankex, I do think it sort of allows for a bit more trust to be brought back into the system in a more crypto-native way of don't trust but verify.
So how does, ultimately, when we step back and you look at it and you say, okay, you're a centralized exchange, but you don't provide some of the things that we traditionally ascribe to centralized exchanges. Is this sort of a hybrid of DeFi centralization and centralized exchanges? Do you see that as being the future of trading in this world, or do you think that ultimately you're going to go more along the lines of DeFi here?
So I do think the hybrid nature of what we're building at Ankex, we certainly believe that the central limit order book and kind of the traditional CeFi order book and matching engine does provide kind of the best investor experience currently. At the same time, crypto has come a long way since the first kind of CeFi exchanges were created over a decade ago. When they first came online, there was no kind of custody solutions. There wasn't really a way to kind of custody your assets safely. But obviously lots of infrastructure and platforms have now been built to kind of allow for separation of responsibilities. And as you know, in traditional markets, we have the State Streets and the BNY Mellons of the world for custody. DTC handles settlement. And then the NASDAQ, the New York Stock Exchange, is responsible for price discovery, kind of sitting in the middle, providing liquidity. And that's what the Ankex model is trying to do. We have the Qredos on the custody side, and we will open up the platform to other EOA wallets. So other self-custody and DeFi wallets will be able to plug into Ankex later this year. So that will open up our total addressable market to the MetaMasks and the Fireblocks of the world, so that anyone with a self-custody wallet can plug in and trade on Ankex. And we're just sitting in the middle providing prices. And so I do think that this blueprint for how exchanges should operate is the way forward. And I do think that, the traditional CeFi, trust me, I got this, I think died certainly last year with the collapse of FTX.
Michael, thanks so much for joining the show this morning. It was a pleasure having you on.
Thanks for having me.
That was Ankex CEO Michael Moro.